Today on the show, we're talking about the small business boom. Let me tell you more in just a second. I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it. Are you thinking of growing your business or beginning a journey into entrepreneurship? Take a shortcut to success by buying an existing and profitable business the right way. Visit businessbuyeradvantage.com and learn more about my online training, group coaching, and consulting services designed to help you win. Hey there, everyone. I wanted to give a quick shout out to Omar, who's in my viewership, who sent in this great article that we're going to refer to today, because it leads in really well to an area of conversation that I don't think people really stop and think about when they're entering this world of small business, in particular with people that want to buy an existing profitable small business. And this ties in really well, of course, to the new book, which is now out and available on Amazon for Kindle, Audible, paperback, as well as PDF. If you want to go over to my website, and of course, the book is available through my Amazon bookstore. If you head to dcbbooklist.com, again, the book is called "Buying versus Starting a Small Business: Search or Startup: A Guide to Keep You from Going Broke." And it's already getting tons and tons of great reviews from people that have had access, early access to it. Those who I invited to review it, as well as people on my email list. And if you're not on the email list, you should certainly head over there, davidcbarnettlist.com. And with that, let's talk about today's topic, because we're going to go take a quick look over here at this article. And this is from Inc. And this is dated from just last month in August 2024. And it says the small business boom isn't slowing down. Americans are turning to entrepreneurship at near record levels despite a tough business environment. And that's a great headline. And we're gonna be circling back to that as well. So, what is the article saying? Well, if we skim through the article here, what we're going to find is that so far this year, 3 million new business applications have been filed, a level outpacing 8 of the past 10 years just under the all-time highs recorded in 2021 and 2023 on a monthly basis. 420,000 new business applications were filed, according to the US Census Bureau. That marks a 2.1% decrease from this time last year. Still, the monthly average of 443,000 new startups remains 92% higher than the pre pandemic norm. And the Biden administration is taking a victory lap on the historic uptick. All right. So what is the assumption being made by these people at Inc. magazine who are writing this article? Ali Donaldson is the person who wrote the article. The assumption is that when we talk about a business startup, that we are talking about a business. And I always like to draw the distinction between a business and the entities or structures that own or run the businesses. So, for example, if you had a corporation that ran 8 stores in a chain and all of them were just organized as one corporation, you could make the argument that that's 8 businesses, right? Because you have 8 different addresses, 8 different places where people are doing business. At the same time, you could have a construction company that builds buildings, but they've got the owners of this outfit have a holding company. The holding company owns an operating company, which actually does the construction work. And they've got all their equipment owned in another separate company, which leases the equipment to the operating company. And you could say, well, that's a construction company, that's one business. But on paper, there would be 3 different legal entities that I just described, right? And if you want greater insight into this, I've got a great video on understanding holding companies that you might want to check out. We'll put a link to it here. So the statistics say that there's more and more formation of businesses. And these are people making an application to a government, whether a state or federal government, to create a legal entity, right? And so I wanted to review a list of all the reasons why someone might want to fill in paperwork to actually create a legal entity. Okay. So, number one, and this is the assumption that the author here is making, is to start a business. So, we're going to create some kind of business entity and we're going to like serve people. We're going to have customers come up to the front of the business. We're going to give people, stuff. We're going to give them services or products or what have you, and we're going to put the money in the bank, have profits, like a real business that we think of every day. That's not the only reason why you would create a legal entity. So, the second reason we would create a legal entity is because we want to buy an existing business and we need a legal entity to actually be the entity that enters into the purchase and sale agreement, right? So, if you're buying the assets of a company in an asset transaction, which is the way most small businesses are done, the selling entity is likely going to be a legal structure like a corporation or an LLC most of the time, and then for you to buy it, very few people would buy a business as a sole proprietor, right? You would get legal and accounting advice that would probably tell you to create some kind of entity of your own. And so by the time you get to the closing table, it's not you as a person buying a business from a seller. It's you that owns a new entity. The entity is the acquirer of the assets of somebody else's entity, right? We get into these legal complications that the attorneys help us sort out with paperwork. So we're going to create an entity in order to do a transaction. Even if you do a share purchase, there could be a lot of really great reasons why you want to create a company to do the acquisition of shares too. So we can create a corporation to actually buy another business. Now, another reason why someone might want to create a new corporation, I mentioned earlier when I gave the example of the construction company, is that they're doing some kind of asset protection or reorganization, right? And so now we want to create these other legal entities to create firewalls between different activities or assets that we might have assembled. And so you could have, again, the example I gave before of the retail chain, you could have one corporation that has 8 retail stores. Someone comes into that organization and says, "Hey, if somebody slips and falls in one of our locations, and then sues us, if we don't have adequate insurance protection, they could basically go after the assets of all 8 of these stores. Maybe it would make more sense for us to reorganize and put every store into its own legal entity. And then you end up with some kind of parent company and then 8 little companies. Now you've turned one business into 9 legal entities. Now, over at the government, how are they going to record that? Because there's no way for the government to say, these are entities being created to start an actual business, and these entities are being created for a solopreneur that wants to do subcontract work and is only ever going to employ themselves. And these filings are for, you know, new manufacturing companies that will have hundreds of employees. And these ones over here are just for reorganizations that are not necessarily going to have any kind of increase or impact in the economy at all, and are just on paper a way of sorting out and reorganizing things. Like the government doesn't have any facility for that. All they can do is look at the applications and say, yep, we've got this many in the pile this month. These are the new businesses being created. So, yeah, so I pretty much covered all the things. So why is this important for us in our conversations about small business? Well, let me share a few more things here because I clicked into one of the background bits of data, the new business application data, and it showed me this is from the United States Census Bureau, and it showed, a bunch of very detailed information. But one of the things that it showed, and I clicked through to it, is this graph here on the screen. And they've sorted them out, the applications between 2 different categories, what they're calling high propensity applicators and applicators other than high propensity, right? So I think they've got it separated out here into there's a certain known number of people out there in the economy who file a lot of creations, right? And so I'm guessing these are sort of like corporate entities and or maybe lawyers that are doing reorganizations or something like that. And so there, if you look here at the big spike that happened in 2020 in the gray box, these would be the people that are filing that are not frequent applicators. They're not frequent flyers over at the government new business registration office. Okay. So you can see this huge uptick in the number of these businesses being created. So what exactly does that mean? Does that mean that this is all part of that whole silver tsunami, businesses being handed over to the next generation kind of thing, right? Does it mean that literally more businesses are being started in the economy, that the economy is growing because there's more and more businesses, right? What precisely does it mean? Well, I did some searching because one of the questions that I often get in my role here, either creating content or in advising my clients, is people will often wonder about the success rate of businesses actually being sold. And I already mentioned that someone might create a new business entity in order to conduct a transaction to buy an existing business. And when the purchase is actually done, when the transaction occurs, the entity selling the business may or may not be wound up, depending on the circumstances around the deal. So, for example, if there's a seller note and the entity doing the selling is not a pass-through entity, there may be some, meaning it's like a C corp or something in the US or a regular corporation anywhere else in the world. Um, if there's a seller note, for example, don't forget that the seller of the business assets is the legal entity that used to operate the assets as a business. And so if there's a seller note, the payee on that note is not the person who did this, who sold their business. The payee on that note is the business entity that sold the assets. So you could have an arrangement where you buy a business and there's a seller note in place that may take years to pay off. And so that selling entity is being kept alive in order to receive the payments and then do something with the money, either to distribute it out ultimately to its shareholder, the person behind the business, or maybe somebody sells a business and they take the proceeds of that sale into their corporate entity that they have, and then they go on to do some other kind of business activity, and so just it carries on. Again, we don't know, and this is the theme of what I want to get at here today, is that all of this stuff regarding the success rate of business sales, all of the stuff that you find out there is not actually substantiated with any kind of real statistics. So when I saw this article and I went and started to look around to see what I could uncover as to how these things broke down, all I found was a lot of articles like this. So this one is from investmentbank.com, and I'm not sure when exactly it was written, but it tells the story of a business broker, and it tells a story about why businesses don't sell. It's overpriced, it's bleeding cash, there's fundamental flaws, et cetera, et cetera. But there's it says according to surveys, approximately 30 to 40% of businesses listed for sale actually ever sell. And there's no footnote or accreditation or any kind of way for me to validate what this said. But when I do a search for what percentage of businesses sell, literally it's page upon page upon page of opinion. It's there's no statistics, no verifiable statistics, it's opinion. So where can we find actual verifiable statistics? Well, um, we actually can find things from people like BizBuySell. So this article, this is from Forbes. This is a more dated article, and this came up in my search. And it says here that only 20 to 30% of businesses that go to market end up selling. The estimate is consistent with BizBuySell's most recent national report. Now, in preparing for today's video, I went and looked up the most recent version of this report, and they did not have that bit of information. Like they did not reveal what percentage of their listings actually sold. But I remember, and I couldn't find it, but I remember from like a year or two ago that I thought I did see something from their statistics. And I believe in my interview with Nunzio Presta from buyandsellabusiness.com, we talked about these statistics, and I think that BizBuySell had gotten down in their reporting to as low as 20% from some of the stuff I remember. But again, obviously this company is reporting the activity on their platform, which does not represent the global universe of the market, right? Um, it obviously it's a big business for sale listing site, but family transitions would not be included there. Management buyouts would not be included there. Any kind of buyer, seller, any proprietary acquirers reaching out directly to business owners to do a deal would not be included there. Any kind of strategic acquisition, roll ups would not be included there. Any kind of private equity group that sends out thousands and thousands of letters to look at deal flow, not included there. Right. And so it's while it's an interesting bit of data, it is not a substantive statistic. Now, I found other articles when I was doing this initial search that was talking about, the secret of the business brokerage industry that 14 out of 15 businesses are unsellable. But again, it's all referring back to anecdotal bits of information. It's just stories, it's people's opinion, it's stuff that people say. So let's let's talk about that because what it means is that we don't really know the actual success rate of transactions. We don't actually know how many businesses out there will ever be sold. So let's talk then about that Inc. article because I want to get back to that because there was something in there that rubbed me the wrong way. Because this article, The Small Business Boom Isn't Slowing Down, seems to paint a picture of a booming, strong economy, right? With people getting out there and starting businesses and really, pushing everything forward. It's being presented as an optimistic, positive thing in the world of small business that there are all these startups. But let's look again at that graph. So again, and maybe this is like maybe I can make this a little bit bigger. Maybe I can see that a little bit better. So yeah, all right. So there's a huge downturn, you know, just before there's 2019, there's 2020 right there. So everything was kind of climbing slowly. And then in 2020, there was a huge drop suddenly in these new business formations. Well, obviously, I think that's related to like lockdowns, right? Like everything that happened in that year, everything dropped. And then there's a ginormous, to use the technical term, spike in formations immediately at the end of that year, right? And then which eased off a bit into 2021 and now has continued to grow, grow, grow. And we've achieved a new level here, a new plateauing, right? So let me tell you a story. I live in a city called Moncton, New Brunswick. And Moncton, New Brunswick, like 150 years ago or whatever it was the headquarters of the Intercolonial Railway, which was a railroad that stretched from Halifax up to Montreal, I think. Okay. And as a part of being the headquarters, the place where the railroad was headquartered, this is where they used to do the repair and maintenance on the locomotives. And fast forward like 100 years, ICR ended up becoming part of CN, which is still a big railroad company today. At the end of the 1980s, when I was just a wee lad, uh, the management of CN decided to shut down the repair shops, which were a giant sprawling facility here. And they employed like maybe over 1,000 tradespeople there. It was huge. And they closed that business and they pensioned off a bunch of people or they gave severance packages to people. And I remember those days because the economy of the city like crashed. All kinds of storefronts were empty, etc. Now, I remember that because I was an early teenager. Fast forward to when I finished university, my first job was with my first real job. If you discount all the little, personal business solopreneur things I was doing as a kid, was with the Yellow Pages. And one night I was sitting around with some of the older guys, and the topic of the CN shop closing came up. And I said to the guys, like, wow, that must have been a really bad time to be working in the Yellow Pages. And they said yes and no. And here's the sort of further bit of information that they shared with me. They said established businesses were suffering because there was this reduction in spending overall in the economy because all of these people had lost their jobs. So this was a huge economic recession in one city. Now there was a recession generally in the early 90s. This came before it. So the city was suffering an economic recession or depression, as it were, that was localized because of this one huge employer closing. And so a lot of businesses saw this downturn in sales and they looked for ways to cut their spending. So they started to cut back, maybe on their yellow page ads, make buy smaller ads, stuff like that. However, what the guys also told me is that it was a boom time for new advertisers. Because, of course, what happened was all of these people got released from the CN shops, and many of them, because they couldn't find a job, turned to entrepreneurship. They decided to start a business. And, if you're going to start a roofing business or a plumbing business or an electrical business, maybe because you have that trade from the shops, you're going to need an ad in the yellow pages in 1989, right? And so these guys were actually, they saw this huge influx of new business startups at the same time as statistically the economy was in recession, right? And so when I look at this chart, what I see are people potentially turning to some form of self employment because they can't get a job or they can't get the job they want, right? And I think that's the real story being told by this, sustained increased level of new business formations in this gray zone. Now, I'll also point out that in the Inc. article, they talk about the formation level, but they never make the distinction between these orange ones and the gray ones, right? And while the orange ones are a little bit higher, they are not significantly more higher than what they were before. It's these gray ones, these applications other than high propensity filers who are creating most of the growth. So what does that tell me? It tells me that, yeah, there probably are more people who are starting up businesses. It could be related to more people buying businesses as baby boomers try to exit or retire. It could also be being pushed up by the number of people maybe who can't find a reasonable job, so they're going to start something. It means that it's a great time to write a book called Buying versus Starting a Small Business, right? Have you got your copy? So anyway, I thought it was great because I wanted to talk about this. I wanted to talk about how, for a lot of people, this whole space, when I see people talking about things like, SBA loan default rates and all this kind of stuff, they keep looking at this space in aggregate and they keep looking at it. Is the future of small business good? Is the future of small business bad? They look at industries, etc. This is a microeconomic space. Meaning, if you're going to dip your toe into the world of small business, it is more about you, your capabilities, your particular market, whatever industry you're getting into, in the place you're getting into it, and the decisions you're going to make that are going to impact your outcomes. The other thing I want to highlight is that a lot of people, when I listen to other people's podcasts or watch other people's YouTube channels, I hear a lot of stories of people getting into these really competitive scenarios where they are chasing these deals and bidding them the prices up vis-a-vis other people. And when we talk about the actual success rate of businesses changing hands, I just want to reinforce the fact that as buyers, you may be in a more powerful position than you think, right? Because a lot of these businesses that are out there just are not going to be sold to anyone, right? And I don't think that you should buy something that doesn't make money. And I don't think that you should buy something that is a turnaround. But there is a huge place to play with between the businesses that everyone's chasing, like the half a million to over $1 million EBITDA businesses, and the ones that are more typically owner operated, that maybe we do require a new owner that has certain specific skills or talents that kind of mirror the experience of the person that's operating it today, the seller. right? And that's really the meat of Main Street, which is what we talk about mostly on this channel. Um, as buyers, don't underestimate your power because ultimately your only leverage is not doing a deal. A lot of businesses out there are going to get a lot of tire kickers, but ultimately there's a ton of them that won't be sold. And with respect to this graph, I think we're in for a bit of change this year. And I think that we're going to be seeing some new challenges and some new opportunities. And I think that we have been for a while, but that it's finally going to start to show up in some of the statistics and reporting. When you get back to the main article here, the small business boom isn't slowing down. Um, Everything about this article is shiny and optimistic. It's all, and I don't know if this is because, people will say, "Oh, it's an election year, media is this way, media is that way." I don't know. But when I read this article, my mind immediately went to my own experience with the CN shops closing here in town and to my own experience, talking to the established guys at the Yellow Pages. And I took a very different story away from this article than what the authors are putting in here. Anyway, I hope you enjoyed today's video. If you've got some feedback or stories that relate to this boom in business startup, please put them in the comments down below. The conversations that happen down below the videos are sometimes incredibly interesting, and I always love to hear your points of view. And if you're listening to this on audio, I don't typically ask for this, but it would be a big help if you left a rating and a written review for the audio podcast, just so that it helps some of the algorithms on the different platforms like Spotify and Audible and Google Audio and all that kind of stuff. It would be a big help to me. Anyway, cheers, and we'll see you next time. Have a good one. So, how can you learn more about buying, selling, financing, and managing small and medium sized businesses? Easy. Go over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and courses that I've prepared for you. You can find out how to subscribe to my email list, the YouTube playlists, and more. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go to Mark Willis at Lake Growth Financial, today's video sponsor. Mark helps people better manage their personal and business finances through the Bank on Yourself insurance strategy. This is something I've done personally and I've seen others use it successfully for years. Go to newbankingsolution.com to find all the interviews I've done with Mark and learn more about the advantages of these programs. While there, sign up for a free consultation to learn what this solution might look like for you.